to Off the Record with ETX Capital. I'm Andrew Sachs, and I'm joined once again here in the studio in London by Tom Higgins. Hello, Tom.
Hi, Andrew. Nice to see you again.
Very nice to see you. And actually, this is a subject which we often talk about over the years, and it's something which has been, I've made a big fuss about it for a very long time, actually, especially when talking about retail forex trading, is the need, very much increasing need, for brokers to go down the multi-asset route. And we talk about multi-asset, but it's often misunderstood, I think, and I think how it's structured, how offering a multi-asset range of diversified trading products to retail traders is misunderstood.
Yes, it's traditionally the retail FX brokers would offer what you would expect. They would offer FX products.
Spot forex, yeah,
Spot forex,
absolutely.
that was it really. And then some of them got interesting and they added some bullion, which is
They did.
effectively traded as spot forex anyway.
Yeah.
And then some of them added some commodities and
OTC,
then some other
OTC.
indexes. Yeah. So they added some equity indexes and other products in there. But then some people started saying, oh, you need to be multi-asset, you need to add thousands of stocks and everything will be fine. That's where it started going a bit wrong, because if you're trading a stock and you can't have any leverage on it, the retail FX trader is expecting 30 times leverage now, or they were expecting 100 times before.
Right, yeah.
And on an instrument where they're trading 10,000 units or 100,000 units, if they're buying a stock and there's no leverage on it, they can't get nearly that upside or downside involvement with it because there's no leverage on it. And that's fine if that's what you're expected to trade, if you're a stock trader. But if you're expecting to trade a leveraged product, then this just doesn't look like the sort of model that you like to work with. So it's been really difficult for people over the years, because we've worked with many of them who've introduced stocks to really make it stick, to make money out of it. And most of the time it just doesn't really generate any money because it's complicated. You've got to have corporate actions processing, which is really complicated to do. And they don't really understand. Hang on a minute, I've got more shares than I had yesterday because there's been some things happen that I don't really understand about. It doesn't happen like that in the FX world. So it's not just about adding loads and loads of stocks.
That's right. And especially when you consider that us, particularly us at ETX Capital, the majority of our client base is based in the UK, and it's a domestic market client base. We have our own proprietary software and platform which is very popular in the UK because of the nature of the trading environment in England, and then the rest is on a combination of our own platform and MetaTrader in certain first-tier jurisdictions in Europe. But those are the two main markets, but it's mostly UK, and the majority of those traders are actually indexed. They trade indices. That's the majority of our customer base. So you have to really refine the index market pricing and ability to access products on indices to be able to ensure that you service those particular clients. It's not just a case of spot FX. Indices is the number one product, actually.
I totally agree with you on that one. That's where we see all the interest. If someone adds lots of stocks and they add indices, you get a few big stocks trading Tesla and things like that.
That's right, yeah.
But otherwise, it's the indexes that people really like to trade on. But there are some other interesting asset classes that are coming along, which, like crypto, and it's not a replacement. People originally, I think, thought, we talked a couple of sessions ago about cryptos in detail, but people thought it was going to be a replacement for the FX and stock world. It's not a replacement at all. It's an additional asset class to have some exposure to if you want to, because it behaves in a different way. But then you've got another one. So we announced a partnership with Aqua Index a couple of months ago, where they're providing indexes on celebrities, footballers, sports, cricket.
Are these listed? They're listed. They are derivatives.
They are offering these themselves. So they create these products themselves. They're a market maker.
Right.
They make markets. We provide all the technology behind it. They make the markets in these products. So and then we distribute them to retail brokers who then offer them to their own clients
on an over-the-counter basis.
Exactly.
Right.
So it's a completely new asset class that existed. It existed before a little bit in the terms if you remember Football Index.
I do, which now doesn't exist. That's right.
The same sort of idea, but not offered on a wholesale basis as Aqua Index are. So that's an example of a really interesting new asset class, and that has so much demand. It's really, really popular. It's a really clever idea.
That is interesting, and it's aimed directly at the retail traders who want a quick, efficient, cheaply executed asset class that isn't going to cause them to have very expensive exchange membership fees or any central counterparty that might slow their execution down. It's a retail product that's aimed at those who are looking for a technologically advanced, quick execution and a diversified asset class.
Yeah, and they're going to have hundreds and hundreds of different instruments that you can trade against, which will be footballers, say cricketers, can be celebrities. It can be anything that they can create an index on. A very, very clever idea. So
it is a clever idea.
I'm very interested to see how that's going live very soon. I'm very interested to see how that will pan out and how that will expand, because any new asset class is really interesting. You don't normally get this level of interest that we're seeing in it. It's huge, the level of interest in there.
Yes, I can imagine, because one thing that's being forgotten is as you say, as we both were talking about, the emphasis on indices, which I think is paramount and should be kept paramount because it's very popular, especially here in England, and also the ability to connect global markets to a retail trading platform, such as listed derivatives and exchange-based futures, ETFs and things like that, which is very popular also. If you look at some of the Swiss banks offer thousands and thousands of these types of things, and none of them are on Swiss exchanges. They're all Chicago derivatives exchange, even though they're traded. The customer is trading with a Swiss bank and has a Swiss bank account, and the customer, from international customers, they know they've got a Swiss account with a Swiss company, but the actual derivatives exchange is Chicago.
Yes, interesting.
So the need for access to global markets, and especially when you look at Asia now, Singapore exchange, all these emerging exchanges across the Asia Pacific markets, financial centres there, Singapore, Hong Kong, those are also very relevant. So multi-asset, I think, is more than just the rather frustrating dynamic of saying, okay, well, we've got a couple of other things on our MetaTrader. You know?
Yeah. Well, I mean, coming to that, having a single platform for the retailer is really important.
It is, I agree.
Because they want to be able to place one set of money with their broker that they're using, which they can use against all of the different things they're trading. They don't want to have to put money with multiple places.
And you want to have all of those symbols showing on one platform, which has been learned by the trader, and therefore the trader feels like they're being looked after by their broker, because they don't have to keep, every time a new product comes out, they don't have to keep learning a new platform all the time, and that there's more continuity. It looks like an evolution of product range, and I think that's very important.
Yeah, and that's been something that's been very difficult in the past, to be able to bring everything under one platform.
Yes, it has.
But now through technology advances, that is possible, and it brings significant advantages to the end trader.
That's right. It's possible via two purposes. First of all, in-house platforms, rather like the sort of platforms that British or American brokers have, or via MetaTrader, where companies like Goldeye will produce a software integration system which will actually adapt the way MetaTrader approaches markets and allow different connectivities into one MetaTrader platform, so that the end result being the actual trader sees one user interface.
Yeah, I mean, this has been helped by, if we look at MetaTrader specifically, helped by MetaTrader 5, which is much better designed for multiple market access, rather than assuming it's an FX product that you have to somehow sort of twist to fit into MetaTrader 4, which is possible, as we spent most of our lives doing, but MetaTrader 5 is designed from the outset to have multiple connectivities for liquidity coming in, and so it's been easier from that point of view to do that. But saying that, we've got lots of other platforms that people are using with our more in things like the crypto areas than FX, but there are other platforms that people are using quite a lot now outside of the traditional FX world. MetaTrader is still the dominant platform,
yes,
and I think it still will continue to be.
It's something like 85% of the entire global retail forex market, I think, something like that.
Yes. I mean, MetaTrader 5, or MT5 as it's often known, was brought in because of the idea of trading futures and equities.
Yes, it was.
So that's now, we're starting to see more announcements from MetaQuotes about brokers who are taking it for other asset classes than FX now. So I think that's now coming through. It's just taken a long time, but to change things, it does take a long time to change how markets work.
And actually, one of the misconceptions, I've been kind of critical of this as well, to some extent, one of the misconceptions that is very much prominent among certain industry participants is that MetaTrader is a legacy platform. It's old. It started in 2004 as MT4, and here we are now using MT5, which is probably itself 10 years old, or maybe more than 10 years old. And they're saying, oh, it's a legacy platform, and we are a financial technology industry, and therefore we are innovating everything behind the scenes, but the front end is legacy platform. But it isn't really, because the MT5 is a user interface which traders are used to, and behind it is a constant level of innovation. So if you're trading a multi-asset set of instruments with global pools of liquidity from various different sources, including ETFs, Chicago exchanges, the football and sports type. Even a few years ago, there was someone who connected the Oxford and Cambridge boat race outcome to MetaTrader. So that and the ability to execute it all on one platform is innovation and is ultra modern.
Yeah, they've continually invested in that. I mean, we build all our technology around our own platforms called Matrix for liquidity management.
That's right,
and
yes.
then we plumb that into whichever front-end platform it is, because we don't want to define that the broker has to use MT4 or MT5 or something else, LC Trade or whatever they want to choose. We want to let them use whatever they like.
Yeah.
And so we make it available to anything you like. And fixed protocol is the standard that powers all of this world. And is what we do everything with. So everything we turn into fix, and then we can move it around, adapt it, muck around with it any way we like. It just makes it a much easier way of working if we do it that way, so that you can then have multiple assets coming in one end, multiple platforms on the front end. It's why we call it Matrix, because you've got multiple things in and multiple things out.
Yes, indeed. And it might sound complicated to those who are listening to this, who are traders, but actually it simplifies their experience, because what you've got is you've got a trader who can use one platform with one brokerage,
yes.
not have to deposit their money with lots of different brokerages and have to log on and off various platforms. One platform with one brokerage, which then the margin capital is held with a, for example, FCA regulated British brokerage, and therefore is very safe and is reliable. And then behind the scenes is access to multiple markets via one platform and just one brokerage.
Yeah, much easier.
Much easier. And I think that's the way of the future. Everything is, if you look at, we often, you and I often talk about cars, both being car enthusiasts. Yes. And if you look at a modern car of today, it's far more, the components of that car is thousands and thousands of more components than one that was built in the 1980s by the same manufacturer. But it appears and feels like one piece. Whereas if you go and sit in a car that was built in the 80s, it feels like lots of pieces joined together. Yes. Switches and lots of different things. That's what's happening to the electronic trading industry. It should feel like one finely honed single unit. So yes. You deposit your capital, you're in and out via one app or via one trading interface, but you're connected to lots of components that are all working independently and getting you the best liquidity and the best execution across various asset classes. But as a trader, you're not concerning yourself with having to interact with all of those separate units. You're able to concentrate on data, analytics, and getting your trading right.
Yeah, so we take that complexity and deal with that really complex process and simplify it. So what comes out of our platform, our Matrix platform, would be a fixed interface that covers everything that you need to do. And then we adapt that into MT4 or MT5. So we do that, we manage all that complexity for you. The complexity is always there. And you've always got that. And, you know, I'm a fan of Tesla cars.
Yes.
And they are almost entirely software driven.
They are.
They have very few moving parts in the engine.
Absolutely no buttons on the dashboard.
Yeah, everything is in software. Very complex software. Very, very complex software. But they've made it very easy to use.
Yes, they have.
You say, you get in the car, you don't even turn it on, you don't have a key, it's an electronic RFID key, so you sit in the car.
That's right.
You press it into go, and you go forward.
Yes, and some cars even have the turn signal. It's the law. I don't know about here in the United States. It's the law for turn signals to make a ticking sound when you, not just to have the light, you have to have this ticking sound. But that on a lot of modern cars isn't a solenoid. It's just it comes through the loudspeakers on the audio system.
Oh, yes.
You know, so they've all gone software driven. So there's literally not, as you say, not very many moving parts anymore.
But I don't think there's less complexity. It's just in a different area.
That's right.
It's now inside the software rather than inside the mechanics.
Exactly. And I think that applies to how brokerages now should be able to connect themselves to the MetaTrader platform. Because in theory, that is disjointed. You know, you're connecting a brokerage to an off-the-shelf software platform, and therefore it's two separate components. But I think nowadays it's pretty seamless, and you should be able to have multiple assets on one platform and execute oil futures or pound dollar, which is a spot transaction, or oil futures, or some listed derivatives one after another on the same platform, and that's sending those orders through different liquidity pools, but it's doing it seamlessly because it's all connected via very complex software that allows the trader to free their mind up to do those as a to make it feel like one unit, basically.
Yes. And what makes it a bit harder in our world is all of this has to be done sub-millisecond.
Yes,
so
it
you've
does.
got complexity, you've got big calculations to do, but you can't take your time to do it. So when an order comes in, you've got to get that shipped through the entire
That's
system,
right.
executed and out sub-millisecond.
Yes, exactly.
Which requires clever software design. In fact, we employ quite a lot of software developers from the gaming industry.
Yes,
because they're very used to writing very, very high performance software.
Yes,
because
they
in
are.
gaming, it's doing an awful lot on the screen
Exactly.
at a time.
And they're good at graphical interfaces.
Yeah. And that's all calculations, it's all mathematical calculations.
Right.
So if you take that analogy, you look at that, we can use that in trading applications to build in the same sort of way.
Yeah,
and so we
absolutely.
can build things that are very quick using the same sort of ideas that they use in gaming.
Absolutely. I think the user experience, which is very important to most brokerages nowadays, should remain one of the most important focuses, I would say.
It's what they see all the time, it's what they use.
It is.
Although, I guess in retail, there's an awful lot of algo trading now.
A lot of algo trading in retail. I think that's a very good subject for another discussion, because I really want to go into detail on the how algo trading has really infiltrated the retail sector. I think that's very interesting. So we'll definitely talk about that in the show in the future.
Great.
Nice to see you, Tom.
Nice to see you
See you
again.
soon.
Thanks.